Hi, traders. I left you last Wednesday on Fed Day and was talking about the VIX, and we were right here. And I said it's possible that we get a third drive down, and that would be an opportunity to short more equities and short more currencies by the dollar. I also said during that broadcast that I used to trade those types of things thinking that it was a lock, but that was not the trade. I wasn't going to trade it. And here's your reason why. So, I had the belief that it could happen, but just because it could happen doesn't mean that it is going to happen, and it wasn't the trade. I said over 1480, the picture will change, and we'll have a breakout in the VIX, and you'll have a continuation rally in the dollar, a continuation decline in the S&Ps, and we broke out that day over the moving average. I said it would be a breakout over 1480, and here we are now attacking the $18 level. This is a resistance level. Whether it clears it now or we have a little pause, that may be up for debate, but the bottom looks pretty secure to me. We'd have to take out the 15 level on a closing basis to negate the move we had last week in VIX. Next major stop is up around the 26 level, and above 26, you could probably be looking at the March highs, which was 31. There are accounts that even take it into the 40s. So we'll see. I do want to cover the end, but I hope I don't forget. I want to talk about the month of March, and kind of like that we may see a repeat of the levels that we had in multiple markets back to the March levels. But I do want to start with the end. So I was looking for 148 in the end, and the BOJ definitely disappointed by, doing the talking head song, same as it ever was, same as it ever was. And I'm sure that's really disappointed a lot of US dollar bears. DSI on it's about 10. This is not a time to be long in, even if it continues up towards 150. I'm going to take a shot here this week. I have a little piece on, I put in the room. I'm going to scale into it. Next sell would be, maybe around 49 and a half. Maybe risk 151 or the old intervention highs. Just to have a fail-safe in there, and that was up around the 152 level. Sentiment, like I said, is extremely bearish yen, bullish US dollar yen. The rest of the dollar index also diverging. I just want to point out that now we're already 2/3 to my target, okay? So now we may begin some type of topping process where we get a spike high, maybe take out these stops, and then pull back to 104 and then make another move towards 108. But we've already had 600 points of the expected 900 points move from this false breakdown. So we're getting closer to this peaking in price. Maybe another 300 pips, but it may become more two-sided over the next couple of weeks as we begin to distribute dollar positions and, have shaken out enough bears. I think a lot of bears will capitulate here. But my preferred short in that kind of scenario, I think is going to be US dollar yen. Okay, because the Japanese may be forced to intervene. Maybe the Fed comes in. I don't have a buy yet in euro. We are beginning to diverge down here, as you can see. We're not confirming these lows, so I still think that we're close to a reaction low. Pound's weaker. But for some type of reaction low to come in, this is what we need. And we also need that for the Japanese yen. And this is what I'm talking about right now, the yields. Okay, so, the day after the Fed, yields pulled back a little bit. They're making new highs right now. You can see they're really not confirming. They're up pretty good. But what is really interesting to me is that when you look at the weeklies of the 10-year, which is way above the October low, TLT hasn't opened yet, but it still has not taken out that low. Looks like it could. We're not that far away. So we'll see. Maybe we're still going to get that flush down here to 88. But I think it's interesting that the 10-year has taken out what would have been a commensurate low, and the TLT is not. And now I want to get to the markets. Equities. So there was a group of stocks called the Magnificent Seven, and many of them have already ended up on Boot Hill. And here are the examples. I talked about an Amazon short near the top. Look at the week Amazon had last week. It's down 10% in 5 trading days off this divergence that I called your attention to, a classic 3 drive. And it's gapping. It gapped here, may have filled it, gapped here. Longer term, I've said, I'll reiterate, I think that we could see Amazon at 110 or lower. So there's one of the Magnificent Seven. We all know Apple has already taken a hit, regardless of whether we get a few day rally here. If I'm right about yields and the dollar beginning to pull back and the yen, we could get a rally, but closes under 165 are going to be pretty not ominous. In fact, most people are looking at 170. So just a measured move from 170 to almost 300 gives you, 145, between 150 and 140. So there's another gunfighter that's maybe taking a hit in the shoulder or so. Here's NVIDIA trying to recover, another one. The Magnificent Seven looks heavy. I've been talking about a gap fill. And the fact that the VIX is acting the way it is now is also a sign. So here's the March theme that I'm talking about. So there will be intermittent rallies. Maybe we get one from just under 43. Maybe they try and defend it here at 42. The bulls are going to come in. But actually, I think a more significant low isn't going to happen until almost like 3,900. And, that's going to be, tough for the market. And bulls will be buying this break. They'll be buying the break all the way down. I see some stuff here, at 43, and 42 I've been calling for. I said I thought we could be there by the middle of October, into the eclipse. Looks heavy. My spaghetti line indicator are pointing lower than last March lows, but I think that they'll make a stand around the March lows. So here's what's important about the March lows. A lot of things have already retraced close to the March lows. So here's the dollar. And where were we last March? Okay, we were down here, up here, right? So this is where we were. The dollar was up here last March when we had the banking crisis, and here's the dollar right back to where it was that March before, and this is when the 3,800 level was hit, and here we are. So I think when you look at the S&Ps, that we're going to see it close to the March lows, which is going to be, maybe about 3,900, and then we get some type of bounce. But I know that the bulls are going to try and take a stand, probably, in here, and then again at 4,200. But I think this is going to be their important stand to try and hold the March lows. So what else could give us a clue of where things are going? Here's the March lows in silver, which is near the targets that I'm looking for. Looks like a bear flag. Here are the March lows in gold. down here around the 1800 level. If I really want to look for an extreme move, which I think would happen during a big risk-off event, it would be where was the 10-year last March? And last March, we were all the way down at 330. So that would have a long way to fall to catch up with it. Some markets are underneath the March lows, in particular miners, some of the miners. So here's the junior mining index. We're underneath the March lows. So maybe these are going to be the first to turn since they led the way down to the March lows. But I think you get the drift is that March lows could be a magnet across the board on the market, on a market reset, a liquidity event in the market where people sell everything because of the market selling off, and you sell what you have. And, you know, the best position to be in is, you know, either short or maybe long the dollar, maybe eventually long bonds. We'll see, because we're really getting long in the tooth. I remember several months ago, I said the market was wrong-footed looking for lower rates. And that turned out to be true. And now maybe they're getting a little bit too wrong-footed about, now that Paula said higher for longer, maybe we're approaching some inflection point. I know that the Treasury wouldn't mind some type of low in the bond market. They have a lot of bonds to sell. And what would help would be the correlation would be some type of high in US dollar yen developing because of the correlation. You also had the oil correlating with it. Yields. So here's the yen, and then here's the yields. Similar, right? And here's the oil. They're bedfellows, strange bedfellows. So we'll see. There could be turning points in those. I'm keeping an eye on it. The yen's going to be very important. Maybe it holds together another week. But I think it's has shaken out everyone who tried to short it here. I actually did it on the Fed day and was rewarded short term. This was on the Fed. We had one down day and we're at new highs. But look at the daily. Daily, we've had successive higher highs in the yen without confirming on the daily. It's only the short-term stuff that's confirming. Here's the 4-hour. We have been diverging since this is September 5th. You can even go back to here or these levels back here when the RSI was way over. That's back in August the 17th. So had several months of distribution. Looks like a wedge to me. Let me just draw this wedge line because this is the key. And you're not going to find too many people looking for a turn in bonds. So yeah, I guess I'll anchor it here. And keep in mind, it's taken all of this in the 10-year to generate not quite yet a new low in TLT on the long end. So those are my contrarian looks where I think we're going to have a shift. I believe the reason behind a drop in yields is going to be risk off. So good hunting. I have Tavi Costa with me on Thursday. Tavi's great. He made some great calls. In fact, they're on my screen. I'll bring it up when I talk to him. Mike will be with you in about an hour and 40 minutes. There will be more volume. I want to wish all the people celebrating Yom Kippur a good holiday. I know it's a solemn one. And, you know, there is an old expression, sell on Rosh Hashanah, buy on Yom Kippur. So perhaps the S&P's digging their heels around this 4,300 level. If you get a rally, it's not the bottom. Sell it if we rally back towards 4,400. You know, for weeks, I talked about the sell zone at 4,500. We exceeded it a couple of times. It was here and here, but I'll tell you that this was the Fed day. And this was a key day. We're getting follow through, and everyone thinks the VIX is broken. Okay. They used to say that about gold. Gold at 200 was a paperweight, an archaic object, and the VIX is broken. Well, they're half right. The VIX has broken out. Okay. It's not broken, it's broken out. So good hunting, everyone. See you in the room.